Hi, this is Optimus Futures, and we're back with a weekly roundup of key commodity and futures markets for our viewers. As always, please let us know in the comment section below if you've got any questions for us relating to the analysis we post, or if you've got any feedback to help improve our sessions going forward. As usual, we're going to be looking at 5 key markets here, which include gold, sweet crude oil futures, euro futures, the S&P E-mini futures, and the 10-year Treasury note futures market. And we'll start this week's analysis with gold. This has been customary for this market for quite a while now. It continues to be majorly indecisive. Last week we talked about how price had kind of just made it towards this this major low over here, but just fell short of it and bounced. And this week sort of continued on with that theme. We did break out of this short-term trend line over here. Price did drop sharply, but once again missing this prior week's low, once again to bounce right back up and just continue to be indecisive. The key here for us on this market right now is going to be this this support trend line. If the following week we see price once again kind of just drag onto this trend line and eventually break it to the downside, maybe pull back, hold as resistance, and then continue its way down, we could see this market develop a sustained downtrend. But if it continues to just be indecisive and chop around, we could see action like this, which cannot really be ruled out given the fact that last week's theme sort of continued on with the indecisive tone that this market has adopted for quite a while now. So if you just decode the price action here from the prior week, so we basically broke out of this short-term trend line. Once again, turned out to be a fake breakout as price continued its way back up, trickled once again above the trend line. We saw price kind of move past this former short-term swing high, which also kind of aligns with a more thicker former support and resistance area. If you look at this as resistance and support and resistance off of this area, so once again, price, we did sort of close on a strong note above this former swing high over here, but once again, price had absolutely no momentum to it. The bulls here in particular, as sellers really just continue to take over once again. The week closed with a sharply bearish candle, but once again the week sort of closed in a no man's land. We're not at a major area here. Just going forward for the next week, we're looking at this area over here as a possible support for price, and if it continues to trickle higher, we could see these levels come into play. But majorly, as we mentioned, we're going to be looking at this trend line over here to see if price can maybe develop a more promising downtrend for the following weeks and months to come. But as of now, it just continues to be a wait and watch market for us. The next market we're going to be looking at is the light crude oil futures for the December delivery contract. So this market spent much of the prior week sort of consolidating, and we'll see in a moment why that was so. With the exception of really just this one strong movement to the upside, which was in line with the uptrend that we've seen over the past few weeks, which has been, by the way, extremely strong, and been able to really push through a lot of major former highs. So if we just jump to the daily here, we can clearly see why price could be consolidating here. We talked about how price was able to push through these important highs over here, as well as this longer term support and resistance level with relative ease here, really, because we just had a minor sort of resistance over here, and price was just able to push through. We didn't even see a typical rounded pullback that you would expect once price breaks out of these areas, which kind of just tells you about the strength of the bullish momentum here. But we've talked about how we do not expect price to continue pushing through all of these highs, especially the ones right over here at the top, because they've been really significant for price, given the fact that this market has not been at these price levels for quite a while. And given that it's so close to this literally ultimate swing high over here, as well as these really important swing highs here, it's understandable that price is consolidating here. Actually, we wouldn't really be surprised if price made a move down from here, sort of to pull back into this strong move up. We're kind of lacking a decent pullback into this uptrend for quite a while now. So yeah, we could see a pullback here in the following week, but eventually we do expect price to continue testing these highs, maybe even break them in the following weeks. But that is not something we would be betting on just yet. We still need more information to develop that kind of a strong bias. But we're still long biased in this market. We just do feel that price could be craving a pullback here as it nears these all-important swing highs. So the next market we're going to be looking at here is going to be the Euro futures, again for the December delivery contract. This was a major disappointment for us over the prior week, and the reason for that is that we talked about how price has been really bullish on this market so far, once again stemming from the fact that price dropped out extremely hard out of the 1.18 level somewhere around this point, where price was stuck and oscillating around for quite a few weeks, and then just broke strongly to the downside. We broke through this bearish flag pattern as well as the daily bearish head and shoulders pattern that we've been talking about as well, and we're going to be looking at shortly. But really, there has been enough evidence to suggest that this market should be strongly bearish. We have enough evidence here to suggest that price should really be extremely bearish here, but we weren't able to see that momentum, at least in the prior week. We sort of just pulled back into this downtrend and all the way to the highs over here, and possibly we could be craving a pullback again to this area, which is kind of a surprise given that we've been in an extremely obvious bearish head and shoulders pattern visible on the higher time frames. So if you look at the daily here, we've been talking about this bearish head and shoulders pattern for quite a while. We talked about how price broke out of it, pulled back, held as resistance, and continued its way down. We've also talked about this as a longer term target for us, but once again you can see the price has kind of lost some momentum here as it continues to pull back. This resistance trend line in confluence with the neckline of the bearish head and shoulders pattern, which also serves to be obviously a major support and resistance level as well. The confluence of these two areas is really going to be the most important place for more selling to come into the market if price is really to push to the 1.14 level that we've been talking about for a while. If, however, we see price push through this area and holds its support and continues its way back up, then we're possibly seeing less of a typical reversal head and shoulder pattern play out, and more of a market that's probably going to be more sideways and choppy for the following weeks and months to come. We could then possibly see price sort of hold at these levels, continue to just chop around, maybe just push through, test these highs over here, continue to just chop around, and basically create more of a sideways rhythm than a typical reversal head and shoulders pattern play. But again, that is kind of shooting in the dark for now, given that we don't have enough information to suggest what price is going to be doing if and when it pulls back to this all-important area. We still have a bearish bias on this market, even though the prior week has sort of been a pullback, which we weren't expecting, but we would still consider this market as bearish for the long term. Okay, so the next market we're going to be looking at is the 10-year Treasury Note Futures market, again for the December delivery contract. The prior week we talked about how price kind of just closed closer toward this major resistance area, and that the following week we could see price possibly test this area and maybe even hold this resistance, and that's precisely what price has been able to do. So if you just plot in this the support trend line here and consider how price has been sort of vegging as it closed in on these levels over here, it's easy to see why price was able to bounce here as hard as it did. So essentially we just saw price sort of break down back to the underside here, close underneath this level. This is a shorter term support and resistance level right here. As you can see, we had evidence of resistance and support here in the short term. Price sort of closed underneath it, pulled back, held as resistance, and continued its way down. As you would expect, the next major stop for price was going to be this extremely important longer term support resistance level, as identified by this extremely precise swing low over here, more support over here, and evidence of more support and resistance in the following weeks. The interesting thing, however, was that price was able to close strongly at this level, and coming later into the week, into the last week, we didn't see any major buying coming into the market as price hit this area. Our gut feel here would be that price may possibly, as the following week continues, trickle further down, maybe towards these lows over here, but you never know when price sort of closes at these levels, as we've seen in the past. But just looking at the momentum, the bearish momentum that has been developing in the prior week on this market, we will have a short-term bearish bias on this pair. We do believe that price is possibly going to try and test the lows around the 124.10-ish area around over here. But again, a lot would really depend on how price behaves as it opens on Monday. So for example, this is kind of the same situation we had a couple of weeks ago, when we saw price sort of close above this all-important area on Friday. In Monday, we saw a small pullback to this area, and price has continued its way on, even though it lost some momentum later on as it hit this area over here, which is once again kind of expected when price is headed into a mess here when it comes to multiple support and resistance levels piling up. So over here we have a similar situation where price is sort of closed below this time underneath this level, and if Monday morning we see a small pullback, initial pullback to this area, it holds as support, holds as resistance. Maybe we see a spike here on a candlestick to the upside, where the buyers try to take over the market, selling comes in, leaves a spike, and we see a strong bearish close on a candlestick here, and prices continues on towards the downside. We may well see price trickling eventually down to these lows over here. But that kind of remains to be seen based on how price will react when the market opens on Monday. Okay, so the next market we're going to be looking at is the S&P 500 E-mini futures market, again for the December delivery contract. So this market in the last week as well just continued on with the theme that we've been talking about for the prior 2 weeks, which is that price is basically overtaken from a consistent uptrend in the prior months to more of a choppy uptrend over the past few weeks. So although we still see price kind of making higher highs here, and that kind of continued the prior week as well, we did see a high that just barely made above the high of the prior week. But once again, look at the sharp move right back down as price tested these lows over here. We're still seeing the bounces coming off of these support levels though. So for example, price pulled back over here and bounced right back off. So once again, over here, price pulled back to these former lows over here, and once again was able to bounce off. And here again, we see a very, very sharp bounce right off of this area. So we do still have the uptrend intact when it comes to technically defining it, because we're still seeing higher lows and higher highs, but it does seem that the bulls kind of seem to be losing the momentum here. We're still not suggesting that the market has really topped. We could be looking toward a really long-term downtrend develop from this point on, but we do believe this market is craving a more longer-term correction into the really long-term uptrend that we've seen almost for many months in the past. So if you look at the daily here, the theme kind of becomes a lot more obvious. So clearly this market has been in and out quite a few months in the past, but if you just look at the RSI here, once again, the market continues to post higher highs, but look at the major divergence that's starting to kick in. This is bearish divergence, of course. So again, this kind of suggests to us that we could possibly be eventually looking for price to turn around for a major pullback. You know, a pullback like this. You know, we haven't had a major pullback into this uptrend for quite a while now. And we believe that area could well come from the 2600 round number region. Price may continue to drag onto this area over the next couple of weeks or so, and we could see some major selling coming into the market around the 2600 level, which could possibly get us to see a pullback into this uptrend. We still have a long-term bias on this market, although we think that this market is craving a more extended pullback into this really long-term uptrend that has been going on for quite a while without a major pullback. So that pretty much wraps up our weekly analysis of the 5 key markets in this series of videos. Do let us know of your feedback and comments, please. We really do appreciate our viewers interacting with us.